Good evening, ladies and gentlemen, and a very warm welcome to all of you. On behalf of CFA Society Pakistan, it is my great pleasure to welcome you to the CFA Institute Research Challenge 2025-2026 Pakistan Final. We are truly honored to have you with us today. We are truly honored to have some of the most respected leaders from Pakistan's financial and capital market community, along with our bright future professionals who represent the next generation of finance and investment leaders. Ladies and gentlemen, before we begin the presentation round, it is my privilege to introduce our esteemed panel of judges. We are honored to have four highly accomplished professionals who bring extensive expertise and leadership experience from across Pakistan's financial service industry. We have with us Mr. Faraz Yunus Pandukta, who is Chief Executive Officer at Al Hilal Sharia Advisors and co-founder at Hilal Invest. We have Ms. Mashmoona Zehra, Chief Executive Officer. May I please request you all to give a round of applause to all our judges. With that, I would like to request. With that, I have some of the rules for the teams that are present here. Before we start with the final presentation, I would like to brief a few important instructions for all participants, teams, and guests. As per the competition protocol, all the cell phones of the team members have been collected and will remain with the CFA Society Pakistan team until the final team has completed its presentation. All guests and participants are kindly requested to keep their mobile phones on silent mode. To avoid any disruption and distraction, we request everyone to refrain from moving in and out of the hall during the presentation. Each team will present one team at a time in front of our esteemed panel of judges. Teams are requested to wait in the boardroom until they are called to present. After completing their presentation, teams must return to the hall and remain seated to observe the remaining presentations. Each team will have 10 minutes for the presentation, followed by 10 minutes for question and answer sessions from the judges. A member of the CFA Society Pakistan team will hold up a play card at the 9-minute mark to indicate 1 minute remains. As soon as the time allocated is completed, the bell will be rung, and the presentation question answer session must stop immediately. Teams are requested to strictly adhere to the time limits to ensure fairness and smooth conduct of the competition. Thank you for your cooperation. We now begin, but before beginning, I request all the teams to go back to the boardroom. The faculty advisors can remain seated here. The mentors can be here, whereas the other teams, except the vision guard advisors, other teams need to move back to the boardroom.
Hello. Good afternoon, everyone. We, Visionary Capital Advisors, are initiating a buy recommendation on United Bank Limited with a target price of 571 rupees per share. Our recommendation is based on three major factors: UBL's strong liquidity with high CASA ratio, and of course, they're top in their competition. Talking about the business, UBL is one of the pioneer banks in Pakistan, operating since 1959. They have expanded themselves in the MENA region, and now they are operating in different segments like corporate, commercial, retail, and of course Islamic banking, maintaining a credit rating of AAA. UBL has one of the strongest customer base of 11 million, and they are satisfying them through 1900 branches with 1750 ATMs. Talking about why UBL is best, UBL is leading this sector from every perspective. UBL has recorded the highest revenue of 375 billion in the first half of 2025, which led them to have a highest pre-tax profitability. This has resulted to give them the highest dividend payout of 115 billion in the past 8 quarters, maximizing the shareholder value, making sure that they are top in their industry. Talking about the shareholder value, due to the positive sentiments of the shareholders, they have become the largest bank and largest company on Pakistan stock market with the market capitalization of 1.275 trillion. This means they are not just big, they are being very efficient. UBL holds one of the strongest customer deposits of 4,300 trillion, which ensures us that they have a market share of 11.5%. Talking about the market, let's see how overall banking industry is performing. Banking industry has growing very aggressively. They have already grown 15.25% in the total investments in the first half of 2025, which tells us that the all banking sector is channeling their liquidity into the investments, and we can see that they have already grown by 21% in the first half of 2025. Why? Because all the liquidity is going to the government securities, which are high in yield and low interest. UBL is capitalizing this trend, and we know that UBL has the lowest cost deposit mix, ensuring that they can earn the high spreads on it, making sure that they become the top in this competitive environment. Now I'll hand over my floor to Aliza for the further financial analysis.
Thank you, Amir. Let's now review the revenue mix. We can clearly see the graph representing the growth of revenue over time. The primary component supporting this growth is specifically UBL's high net interest income, which is specifically derived from strategic investment portfolio. UBL's net interest income is 66% of the total revenue, while non-interest income is supported by high fee income, gains on securities, and FX income. Moving on to profitability, strong profitability is a factor that shines UBL. Return on equity expands significantly from 12% to 25%, which is 111% growth over time. While despite normalization, we believe return on assets continues to grow because of UBL's strong qualitative and quantitative footings. Finally, the profit remains robust with 31% compounded annual growth, which is enforcing strong investors' confidence. Now, I would like Waleed to take you through the balance sheet composition.
Thank you so much, Aliza. Now, looking at the balance sheet composition, UBL follows a return-focused approach where the UBL strategy to hold the major chunk of assets in investment, which has given a phenomenal return in the past, which will be continued. Thus, higher investments will support profitability with higher interest and gains. The idea depict that the UBL approach to capture income spread between these two. We believe that the ADR is ADR, although it is stable, but with the support of economic environment, it will increase over time. While the car maintains at 21.31%, which reflects the comfortable buffer over the regulatory requirement. While the most important is the UBL's CASA ratio, which remains exceptionally high with 91.48%, which reflects the lower cost of fund and supports the margin even in a declining interest rate environment. Now, Daniel, the stage is yours.
Thank you so much, Waleed. Now, as we move on to one of the most important part of our research, let me walk you all through our valuation methods. Primarily, our valuation is based on the price to book method. To further augment this, we have also used price to earning and dividend discount model in the mix. Together, this blended valuation approach gives us a target price of PKR 572 and an upside potential of 15%, leading to a strong buy call for UBL. Further, let's dig deeper into the variables of price to book. Our multiple of 2.8 was calculated with an ROE of 29%, along with a cost of equity of 18% and a growth rate of 12%. Alone, this method has given us a strong upside potential of 26% with a target price of 672. Similarly, if we also look at the ingredients of price to earning, you will see that our multiple of 9.8 was calculated with a payout ratio of 66%, along with the same variables, cost of equity and growth rate of 18% and 12% respectively. This method has given us a target price of 576 with an upside potential of 16%. Finally, coming to our last method, as we see that UBL has been giving dividends in the past and we expect that it will keep on giving dividends in the future also, we have discounted our dividends with a cost of equity of 18% by inputting a beta of 1.03 and a market risk premium of 6.3%. Finally, we also tested the sensitivity of our model with two most important variables, cost of equity and terminal growth rate. Now we know that cost of equity is important for measuring the risk perception, while growth rates drive the multiples. As the heat map on the right will show that the prices remain highly sensitive across the cost of equity. This means that any further changes in interest rates will further increase our potential. The grid also shows that all the intrinsic values of price to book remain totally above the market price of 495, further emphasizing our buy call for UBL. Now I would request Alina to take this presentation further from here.
Thank you so much, Daniel. Moving on. On this slide, we can see investment risk, which comprises of market risk and firm risk. As it can be seen in market risk, there is macro and credit cycle risk plus interest rate, which means in any changes of policies could be a market risk. And when we look at firm risk, we have NPLs, which is asset quality, and regulatory and policy, which means if the loans go bad, it could not be good for UBL. But UBL is mitigating this through diversification. Now we are looking at ESG and all the sustainable project developments which UBL has done to promote ESG. In environmental, we have renewable energy financing, which reduces fuel. In social, we have branchless banking, Amin account, Rouge account, and in governance, a strong corporate governance structure which shows stability and growth. On this slide, we see the ESGs which UBL will be achieving through those products, and moving forward, they will do well. Over here, I would just like to say that there's one strong signal which every investor trusts, and that is delivery. And UBL has delivered every single time. Market appreciates goals and ambitions, but they only reward those teams who perform consistently, and UBL does that. In one of the previous sessions, we were told that UBL will be at the top of the market, and look at where they are. They are at the top of the market. And this is because of an exemplary management we have in front of us. They set target and deliver them. These slides don't just say confidence, but they create it. And this is why they are rising higher every year. And this is why UBL is a buy. Although we are ending this right here, but that does not mean UBL will not go further up, and they will still be at the top of the market. Thank you.
अस्सलामुअलैकुम। अच्छा, आप लोग के फाइनेंशियल एनालिसिस में अगर इफ़ यू कैन कमेंट ऑन द बैलेंस शीट ऑफ यूबीएल के इफ़ यू नो व्हाट सॉर्ट ऑफ देयर इन्वेस्टमेंट मिक्सेस, कितने इनके पास पीआईबी की क्या पोजीशन है, इसकी इनकी फ्लोटर्स की क्या पोजीशन है, अगर आप इस पर थोड़ा सा कमेंट कर सकें। थैंक यू।
सर, यूबीएल की जो पीआईबीज़ में है वो 59% है। जो 10 इयर्स इनके पास पीआईबीज़ हैं वो 59% है, एंड जो 25 इयर्स पीआईबीज़ हैं उनके पास वो हैं अप्रॉक्सीमेटली 20%। थैंक यू।
फ्लोटर्स पे आप कमेंट कर सकते हैं, फ्लोटर्स कितने हैं इनके पास?
59%। टोटल 59% है।
फिक्स पीआईबीज़ कितने?
20% अप्रॉक्सीमेटली।
Okay, my question is regarding the non-markup income. In the terminal year, there is almost a 50% increase in the net interest income. आप लोगों ने तकरीबन 80 बिलियन का गेन ऑन सिक्योरिटीज लिया हुआ in 2030. Given that the terminal year it will heavily affect the valuation, so what was the rationale for such a big increase in the final year? Can you comment on it?
Hello. Sir, for the massive increase in capital gain, we believe that as the interest rates would be falling, so UBL would be selling off its fixed income securities. That's why we have forecasted a good increase in CGT.
Okay, and how did you calculate the growth rate of 12.3% for the justified price to book?
Sir, that growth rate was calculated with multiplying our retention ratio and return on equity.
हेलो। आपने शुरू में जिक्र करा कि यूबीएल इज़ फोकस इज़ टुवर्ड इस्लामिक बैंकिंग, और आपकी प्रेजेंटेशन में कुछ कहीं जिक्र नहीं था, तो व्हाट्स योर टेक कि हाउ विल यूबीएल बी अ लीडर इन इस्लामिक बैंकिंग? कैन यू कमेंट ऑन इट प्लीज़?
Sir, UBL is actually leading from the front in the conventional banking sector right now, and Mizan is leading the Islamic banking. But obviously, State Bank की policy के हिसाब से by 2027, we all are converting into Islamic banking. So अभी UBL की तरफ से कोई ऐसी clear indication नहीं बताई गई हमें, तो हमने उसको stagnant रखा, उसको constant रखा है।
Just to take it further, can you please comment कि जो UBL की profitability है वो Islamic banking से कितनी आती है versus conventional banking?
Profit. Sir, let me discuss with my team.
Please,
Just
sure.
give me 1 minute. Sir, right now UBL is also leading from the front foot in the profitability. UBL has the highest profitability in the past 2 years, from 2023 to 2025.
What do you mean by the highest profitability in terms of what? The market share or what?
No, in overall, it is leading from the front.
Okay, thank you.
My question is on the infection ratio. UBL's infection ratio fell to 8% in 24. But do you have an idea of what is the infection ratio currently in 25? And where do you see it going forward? It was infection ratio. You can go back to the slide. It was at 8% in 2024 you showed.
Okay, right now it is 14%, and in 2024, we have forecasted it as stable, the infection ratio, because we believe that in future, UBL will be more focusing on advances rather than investments rather than advances.
Did you check why it fell to 8% in 2024?
So basically, we assumed it was a historical value, which means the UBL has recovered the NPLs at a faster rate, and there was a faster recovery due to which the infection ratio fell in 2024. And since this was historic, so the action was already done by UBL.
Okay, with regards to the ROE assumption, which is about, if I'm not wrong, it's 29%, right?
Yes.
For your valuation. So what has been the historical, if I ask, can you give me a number what the last 5 years ROE has been for UBL? And can you justify taking 29 to 30% ROE on a perpetual basis?
You are talking about for the valuation,
Yeah.
29%.
Yes.
Sir, as we have maintained the consistent trend, UBL's ROE has been increased by 100% from 2020 to 2024 already. And even in our assumptions, in our calculations, the ROE is increasing by a same percentage, which is around 100%. Now, if you ask about why we have taken 29%, so for our calculation of forward multiples, we have taken an average of future ROE. That is calculated on a future average ROE.
Okay, so you are expecting the 30% ROE to continue for the next
Yes.
perpetuity. Okay.
Just one more question from my side. I think UBL's strength has been the leverage, right, for the last 2 years. उनकी जो leverage है repo borrowings काफ़ी तेज़ी से बढ़ी है, जिसकी वजह से उनकी profitability भी हमें नज़र आ रही है. So आपकी क्या assumption है going forward, ये जो leverage जो है, जो repo borrowings है, ये किस तरह continue रहेंगी going forward, उसकी क्या assumptions हैं?
Sir, we have assumed that UBL will be going with the repo क्योंकि UBL पिछले लास्ट जब हमारे इंटरेस्ट रेट सबसे ज़्यादा थे तो उस वक्त भी उन्होंने इतना बड़ा हाई रिस्क लिया था जिनकी वजह से नाउ दे आर लीडिंग द सेक्टर एंड वी आर अज्यूमिंग कि ये आगे भी इसी तरह लेवरेज करते रहेंगे अपनी इन्वेस्टमेंट्स को गवर्नमेंट सिक्योरिटीज़ में.
Okay, thank you.
What are your discount rate assumptions for the next 4 or 5 years? Policy rate assumptions.
So, Miss, currently our policy rate assumption is 10.5, which is according to the market, and we have forecasted a year-on-year cut down in the policies, leading to 8% by 2030. By 2030, yes. We are decreasing it gradually.
So what risk-free rate have you used in this model?
Sir, we have using the 10-year PIB rates as a risk-free rate, which is around 11.6%.
Okay, you are saying that you have taken the interest rate to 8% in the terminal year, but you are using the risk-free rate of 11%. So shouldn't both of these two numbers be synchronized? Because if you are expecting 11% to continue the perpetuity, which is what the PIB pricing. So, but if you take the 8% interest rate in your model, then I think the model is underselling your earnings. So, any comment on this?
Sir, can you please repeat that question?
My question is that you have risk-free rate and the long-term inflation assumption should be synchronized. If you are using a risk-free rate of 11%, you are assuming that it would remain around, the interest rate would remain around 11% till perpetuity. But in your model, you have used the 8% inflation rate in your terminal value.
Yes.
So, any comment on this?
So let me just discuss it.
One minute left.
Okay, so sir, we have taken an assumption like we have taken an 8% interest rate policy rate in the future, so we are decreasing it gradually, and 11% is not a very unrealistic value, so we believe that it can justify our valuation.
And we have decreased the 8% in certain quarters, so it has not reached the 8% immediately. By 2030, it has gone down to 8%. Right now, it's still at 10.5. And in 2027, we have decreased it gradually to match that. Thank you.
Thank you.
रज़ा मुझे एक बात बताओ कि PIBs की और फिगर सही थी इनकी? सही थी ना? प्लस माइनस सही थोड़े से कंफ्यूज हो गए ना डिटेल भी नहीं था और खैर वैल्यूएशन की बहुत हल्की थी यार मतलब इन्होंने डिटेल्स बिल्कुल 30%
Thank you, Team Vision Capital Advisors. It was a wonderful presentation. I now call upon stage the next team to present. The name of the team is Market Mavericks.
Market Mavericks.
Good evening, everyone. We are Team Market Mavericks. We initiate a hold recommendation using a blended approach to calculate a 12-month target price of rupees 525. This implies an 18% upside from last close as of 1st January 2026. Our recommendation is based on three main investment thesis points. Peak rate tailwinds fade as returns normalize. Fiscal overhang keeps liquidity parked in government paper, and deposit momentum meets a tougher competitive landscape.
Okay, so let's start with the entity itself. UBL was founded in 1959, backed by UK-based Bestway Group, and operates a massive network of over 1,900 branches and 1,700 ATMs. While its global presence include UAE, Bahrain, and Qatar, its core strength lies in its domestic dominance. It mainly operates in 4 different key segments, which include commercial, treasury, digital, and asset management. As you can see from the graph of revenue, graph of the revenue mix, the UBL has structurally evolved into investment-heavy institution, creating a dependency on carry trade. Moving to industry landscape, in 2025, UBL became the largest company of Pakistan by market capitalization exceeding 1.28 trillion. However, the ground beneath them is changing as the industry is moving from rent-driven market to franchise-driven one. The biggest threat isn't traditional peers like HBL or MCB. It's the explosion of Islamic banking, catalyzed by the regulatory requirement for full conversion by December 2027. So financial model often miss the value of intangibles, but we didn't. Using integrated value adjusted factor, we recalculated UBL's true intrinsic value of 599.23, which is around 35% above its last close. And this value is mostly driven by social premium. On social and governance part, UBL has performed initiatives like doubling the industry average of maternity leaves, which helps in the growth of female workforce, and also they have implemented offensive security unit, which reduce the risk for cyber frauds. On environmental part, they lag behind its peer with 163 solarized branches, and which act as a hedge against administrative inflation, and 9 billion renewable financing, which reflects its untapped growth engine.
Now, the first investment thesis point, peak rate tailwinds fade as returns normalize. In the past 5 years, there's been COVID era easing, then there's been inflation-led tightening with rates peaking in 2024 and 2023 and 2024. Following that, there has been disinflation in recent times fueled by demand compression, FX stability, and easing energy pressures. Now, in recent times, you can see that the inflation rate has come to SBP's medium-term target of 5 to 7%, and with the policy rate being cut to 10.5%, the direction is clear. What this means for UBL, UBL has almost 80% of its earning assets deployed in investments. And a significant portion of these investments is in fixed rate or shorter tenor assets. In a stable or declining rate environment, as the investments are expected to mature, the same ROE levels which were shown by UBL in 2025 are not expected to persist. They're going to still be structurally strong, but they'll normalize. Fiscal overhang keeps liquidity parked in government paper. So for many years now, the government of Pakistan has been running a fiscal deficit. And what happens is that when the government needs borrowing, it goes to the banking system. The banking system ends up putting its liquidity with the government, and its liquidity is absorbed in government paper. UBL follows the same structure as I mentioned earlier. And in a stable and declining rate environment, what's happening is that the return is dependent on an asset that is inherently cyclical.
Now let's talk about investment thesis point number 3, where we discuss about the competition. The market is being driven by the Islamic banking industry in recent times, and so the deposits have started. The deposits in the Islamic banking system account for nearly 30% of the deposits in the system, which reaches to 9.85 trillion, and this is growing with a CAGR of approximately 17% on an annual basis. This brings the competition very intensified, and is very difficult for every bank to maintain the deposits to maintain and grow their deposits. Although UBL showed a phenomenal growth of 81% in the previous cycles, but that kind of deposit share is hard to sustain, yet alone grow further. So what is the challenge? The challenge remains that when the competition intensifies, the cost of deposit increases, and to maintain that kind of deposits with that cost is very difficult. So our point is that UBL's deposit would normalize as time passes, and the cost would go up, reducing the NIMs. Let's talk about the valuation. We use a multi-method valuation that indicates a limited upside. We use a combination of 3 models: dividend discount model, residual income model, and justified PB, which on average showed a peak, an upside till 525 at the end of 2026, which also incorporates the dividend yield that would be coming in, which accounts for 8.5%, and capital gains yield account for 9.49%.
So coming to our dividend discount model, which shows a standalone price of 560 Pakistani rupees. In it, we apply a 12% terminal sustainable growth rate, which directly mirrors our forecast of Pakistan's M2 monetary supply growth. Our residual income and justified price to book models show a more modest upside of 2% and 0.2% respectively. UBL continues to create economic profits with its ROE above its cost of equity, but normalizes around 25%, positive residual income, but we forecast the net interest margins to normalize around 3%, which means the spread becomes narrower. So we conducted a scenario analysis of our valuations, which were driven by three key assumptions: the policy rate, the conventional deposits, and the Islamic deposit growth. So our optimistic case, which resulted in a 551 Pakistani rupee target price, is based on faster policy cuts and good growth and good deposit mobilizations. Conversely, our pessimistic case, which resulted in a 496 Pakistani rupees, is based on stickier rates and slower deposit mobilizations. From a relative valuation perspective, UBL is priced at a premium to its conventional competition. This is largely justified by its best-in-class ROE. So this also suggests that the market has already priced UBL for its excess return. So we see no re-rating catalyst anymore. Hence, we maintain the hold recommendation.
Assalamu alaikum, everyone. Now, before I move on to the sensitivity analysis section of our report, I would like to provide a brief overview of the risk that the company faces. The first risk that the company faces is of interest rate sensitivity. It has a high probability and impact, whereas if the interest rates do go down, the valuation of the company goes up, owing to a lower discount rate and 8.82 trillion investment book. The second risk that the company faces is of fiscal volatility. The fiscal deficit is expected to rise by 1.35% quarter on quarter, rising to 6.4 trillion by 2026. Now, the problem that the government faces is that they're not able to generate sufficient tax revenues. And because of that, they primarily target the banks through new taxes. And so if the tax rise, UBL's valuation is going to go down. The third is the credit risk. Credit risk, it has a low probability and impact because the bank primarily lends to the government and not the private sector. The fourth is the strategic risk, whereas our model assumes a base case deposit CAGR of 14.77%. Now, due to competition and the fintech, if this goes down to 13.01%, it will highly compress the net interest income, and therefore a lower price to book is justified. The fifth is the macroeconomic risk. Here, if the IMF program fails or if the economy is in crisis, then the UBL, being a major lender to the government, is also going to be affected. Here is a sensitivity analysis. I'll just conclude. Here you can see an upside of 52% and 35% downside in case of the interest rate, and in case of fiscal volatility. Okay, thank you.
Thank you so much. Okay, my first question is, can you clarify what your actual call is? Because you have mentioned that there is some social value aspect as well. So what is your final call? Is it a hold or is it a buy?
So when we use the integrated weighted adjusted factor, which is calculated through the theoretical shadow pricing, which shows the long-term bank's resilience. So and the data for that is not readily available for shadow pricing, and that's why a lot of assumptions has been taken, and the model is very sensitive to these assumptions. So that's the reason, like, we didn't incorporate that price in our original target price, and even the market does not include these value in its pricing mechanism. That's the reason, like, we meant our whole recommendation.
Okay. And for your whole recommendation, you have mentioned that your target price is 525, and the upside comes about 17 to 18%, right? So when you talk about target price, that 525, is it the price that you expect it by the end of the year?
So as mentioned in our presentation, the target price is made up of our expected dividend calculations as well as what we expect the price to be at the end of the year, next year. So
Right.
it consists of 8.5% dividend as well as 9.5% capital gains.
Okay. And what is your weighted average cost of capital or the discount rate at which you have discounted the?
So we have used 17.7%, that is our cost of equity.
Right, and the upside is slightly higher than your cost of equity. So shouldn't it be a buy?
The upside is around 18% and 17.7% is our cost of equity. So we based it on that and we issue the hold recommendation.
You mentioned that there is an inverse relation between your interest rate and your earnings and valuation. So if suppose the interest rate goes down by around 3 to 4% in the next couple of years, so will it impact UBL earning or not?
It will impact UBL net interest income, but if the interest rate even rises, it's going to be a little problematic for UBL. In the event that the competition is highly rising, we can see Mashriq Bank offering 5% on even the current account. We can see Naya Pay offering a much lower international transaction fee. So if UBL wants to stay competitive, its net interest margin will be shrinking. So yeah.
Okay, but if the interest rate decline by around 2 to 3% in next 2 years, hadn't UBL had a large fixed income portfolio to hedge this risk? Do you know what is the fixed PIB portfolio size and its yield? Can you give me a rough idea?
PIB's fixed is 20%. The whole investment book is 8.82 trillion.
And what would be the yield on the fixed PIB? Any idea?
The fixed PIBs in Sukuk have a yield, a weighted average maturity of around 4 years and a return of approximately 14.4%. UBL invested into them when the rates were significantly high, so they benefit from that at this point in time.
So have you done any sensitivity on your earnings and valuations? If can you show it on the screen? Can you explain?
Okay, so if interest rate goes down by 100 basis point, we see a capital upside of 52%. And if interest rate goes down, we see a capital upside of 52%. And if it goes up, we see a capital downside of 35%. Similarly with the tax, sorry.
This is on your target price, I believe, yeah? On earnings, do you have any sort of sensitivity on the earnings?
I want to ask a question on the deposits because I think deposit growth for UBL has been staggering for the last 1.5 years. So what's your assumption for next year? और उसके ऊपर आपका breakdown क्या है कि how much will be from the current account, how much will be from the savings account going forward the next 2-3 years? और उसकी क्या rational क्या है उसके पीछे?
Okay, so for deposits, as UBL experienced high growth in 2025, the highest within the competition. So we expected that in the next few quarters, the growth is still going to be really high. If I tell you an exact number, we assume that in the next few quarters it's going to be increasing, and then after 6 to 7 quarters, it's going to grow at the M2 growth rate. So if you take a CAGR of our 5-year assumption, it will be around 14.47% for deposit growth. We assume that deposits are still going to be growing at such a high rate because of UBL's sales strategy, which is so aggressive at this point in time. UBL is investing heavily into branches. They're making their sales force partners in their operations. And for this reason, they've been so successful in getting those high current accounts and getting those high saving accounts. So we expect that to continue for the next few quarters and then normalize.
Just another question. Your deposit growth is about 15% CAGR, you said, right? And currently UBL has a current account of about 50% current account mix. So what's your assumption going forward for current account?
So currently it's about at 50%, and we've assumed that over time the current account is going to stay at the same proportion because the sales strategy is specifically focused at getting deposits and specifically current accounts because they are so beneficial.
So if you expect the current account to remain, at similar level, then what are your assumptions of profitability going forward? Why is your profitability increasing going forward?
As we said, the competition is increasing so much. The cost of deposit is also increasing. As Tala said, Mashrik Bank is offering 5% on current account deposits. UBL currently is not offering, and to remain competitive in the industry, they will have to offer something more than more than zero rate or some other benefits which would cost more. So the margin in their the margin they have with current account deposits and their investments, that would reduce. So that's why we are saying the profitability would go down.
Just adding to that as well, the major reason for net interest margin compressing is because UBL's portfolio consists of 80%. 80% of its earning assets are in investments. So now as the interest rates are in a declining or stable rate environment, it's expected that the 40% assets which are not floaters at this point in time, they're also going to mature and they're going to reprice downwards. And when that is done, the return on equity and profitability is not going to be at the same 2025 levels. It's going to be lower over time. It's still going to be strong, but not at the same levels.
Thank you.
Right. Can you walk me through your justified price to books valuation? What are the key assumptions and the growth rate, the ROEs?
Okay, so for the justified price to book, our resulting the price was what was the price? So the resulting target price is 446 Pakistani rupees, and in it we came to a price to book multiple of, I guess, 2.4, and in it this is basically the.
So
how did you arrive at the justified price to book of 2.4?
I'll explain. So what happens is from the earnings, we were deducting how much equity is being earned every year. So book value of equity minus earning per share, and using that we got a residual income, and I think
So basically, for justified price to book value, first we calculated the return of equity, and then we calculated sustainable growth rate for that. And like we had the cost of equity, and then using the formula ROE minus divided by R minus G, then we came to the value of 446. So that was our assumption, like what would be the return of equity for the UBL currently, and then we assumed the sustainable growth rate for that. Then using that, we came to this value.
But see, your price to book methodology is actually depressing your overall target price, right? And for price to book, you are taking a target price that you are expecting it to be trading at 446 by end of the year. But does that incorporate dividends as well?
All these three prices do not add dividend. If we take out the average, that would come around to 486.67, which is a 9.5% upside. And we added the dividend at the end in the target price. So that is around 38 rupees in the coming year, in the whole year. So we added that, and that is 525. So all these prices are at the end of 2026 and adding up 38 in that.
Thank you.
जीएसटी शुरू में कर दिया ना, देखो प्रीमियम लगाया और नहीं, लेकिन फिर उसको वैल्यूएशन में बिल्ड करते हैं ना, ये जस्टिफिकेशन देते हैं कि हमें लगता है कि होना चाहिए। इतना अच्छी वर्किंग की शुरू में, आई वाज लाइक ओके वेरी नाइस, बट फिर बाद में वैल्यूएशन में उसका कोई इम्पैक्ट नहीं।
बट वो मुझे वर्किंग भी जो है ना थोड़ी सी समझ में आई नहीं, क्योंकि
मुझे लग रहा है चीज़ें दिखाई अच्छी, बट दे कुडंट लाइक डिलीवर, दे कुडंट एक्सप्लेन एंड कनेक्ट देम।
देखिए ना, ये आई डोंट नो, कैपिटलाइजिंग PKR to 68 million in trading and information reveals significant value, PKR 75.1 per share, ये कैसे आई?
कैसे आई? और जस्टिफाइड प्राइस तो भी
नहीं एक्सप्लेन कर पाए। ठीक।
Thank you, Team Market Mavericks. Please give them a round of applause. I now welcome our next team, Cult of Compounding, for their presentation.
Just 1 second, let me see if this is working.
Assalamu alaikum everyone and good evening judges. Now, UBL recently became the largest listed company on the Pakistan Stock Exchange, and so naturally, current retail and sell-side sentiments are somewhat bullish. But today, we want to propose to you a more conservative and a more disciplined valuation approach. We initiate coverage on United Bank Limited with a base case target price of PKR 489 and a hold recommendation. While we do expect deposits to grow steadily in the short run, we are also foreseeing compressing spreads on the repo PIB carry trade that the bank has been leveraging on a massive scale recently. Overall, we think that both of these factors are priced in an efficient manner right now. And so there's really no free lunch left on the table anymore.
As we all know, Pakistan's banking system operates in a highly volatile macro environment. Interest rates and inflation move closely together, with inflation peaking at around 30%, while interest rates swinging from 7 to 22%. This creates frequent repricing of assets and liabilities. In this environment, banks cannot rely on stable credit growth. As a result, banking systems in Pakistan follow an allocation-based model rather than a credit-led model. Asset growth over the period has been driven primarily by investments, especially government securities, while loan growth has remained broadly range-bound. Banks generate returns on the basis of risk and yields rather than expanding their loan books aggressively. This behavior is reinforced by strict Basel III restrictions that are placed by the State Bank of Pakistan. Capital and leverage requirements constrain balance sheet expansion and link dividend payouts to regulatory headroom. As a result, earnings quality and asset allocation is shaped by regulation and not just by management choice. UBL's financials reflect a transition from peak rate-driven returns to more stabilized earnings, which brings us towards our financial analysis.
As we can see here, UBL is transitioning from supernormal returns to structural stability. Our model identifies three main drivers anchoring our neutral stance. First, margins are normalizing. As the CASA ratio moderates from 84% to 79.6%, the cost of funds will naturally rise. Consequently, we project the net interest margins to compress initially to 3.68% before finding a stable floor, remaining range bound between 3.9% and 4.2% through 2030. This signals that the era of effortless margin expansion is behind us. Secondly, the asset mix is pivoting. We forecast the current 23.1% ADR to drift further to only 22.1% by 2030. This is strategic reallocation. By keeping a lean loan book, UBL can aggressively leverage its liquidity into government securities. This prioritizes stable risk-adjusted returns instead of volatile private sector credit. Finally, our efficiency has pretty much plateaued. With the cost-to-income ratio flatlining near 30%, operational leverage offers limited upside. These factors signal that the bank has a defensive posture and the stock is priced for stability instead of aggressive growth. These become the basis for our investment thesis.
Over the past 2 years, UBL has experienced significant economic growth. The key question here is whether this growth is reflected by a structurally better bank or simply a favorable point in the return cycle. We frame our view around three theses. First, structural strength. UBL is a high-quality deposit-led franchise. It has materially delivered high-quality deposits, outnumbering the industry by 78 index points since 2022, supported by an 84% CASA mix. This has led to deep, low-cost funding, balance sheet flexibility, and protection against the downside. Second, cyclical earnings normalization. Despite UBL having strong deposit history, recent earnings are rate funded. Around 75% of the investments are parked into 75% of the assets are parked into investments, predominantly government securities, while 84% of the interest income is investment led. During the rate upcycle, this leads to amplified returns. But as the rates normalize, this leads to NI, net interest margin compression risk, and reinvestment risk. Third, dividend as the return anchor. So basically, with the capital upsides moderating, we believe that dividends become one of the most significant sources of return for the investor, leading to a mitigation in the downside. In conclusion, dividends and deposits mitigate the downside while investment-led earnings exacerbated, thus holding a hold recommendation.
Okay, so to value UBL, we use a blended framework and arrive at a final target price of PKR 489. We assign 80% weight to the residual income model, and we explicitly prefer this over justified PB because it allows us to phase out what are currently abnormally high ROE levels to more sustainable long-term levels. We do retain a 20% weight in the DDM because in Pakistan, banks are judged quite critically on their ability to pay out dividends relative to short-term interest rates. To sanity check our valuation, we do use a relative ROE versus PB regression, and you can see that based on the graph, UBL is at best fairly priced and maybe even with some likelihood slightly overpriced at this current price point. To check for robustness, we use Monte Carlo and sensitivity analyses. And there are really two key insights we're discussing here. First, our valuation is a lot more sensitive to risk than it is to growth. And based on the sensitivity chart, you can see that for us to be able to issue a comfortable buy at around a target price of 560, the risk premium for UBL would have to drop by around 120 basis points. And we just do not see where that concession would come from. Our Monte Carlo analysis yields a median valuation of PKR 492, very much in line with our base case of 489. And it shows us that 49% of cases actually lie below our target price. And so statistically speaking, there's very little margin of safety in being overweight on UBL right now. While we are firm on the whole stance, I do want to discuss 3 key risks to our thesis. Interest rate risk. We know that interest rates are on the decline, but if they go down faster than expected, that puts further downwards pressure on UBLs and IMs. Political risk. Any rise in political instability will cause an even greater rise in the equity risk premium investors demand to hold risky assets like UBL stock. And lastly, we actually have an upside risk. I'm referring to UBL's massive cookie jar, their revaluation surplus account. Now, these are unrealized gains on their AFS bond portfolio, typically reported at fair value through other comprehensive income. Now, while other banks might be able to make use of such a large surplus, UBL sits at a very comfortable 21% CAR and 3.27% leverage ratio, meaning they do have the capital leg room to be able to liquidate some of the surplus and have it flow through their profit and loss. And we saw them do this last year with a 42 billion rupee harvest. And a similar harvest in the future will likely introduce upwards volatility into the stock price.
UBS 30% CR UBS 30% CER is world-class, but if we dig deeper, we can find that UBL's internal efficiency is owed to measurable ESG initiatives such as solar power, branches, 100% LED coverage, paperless banking, and almost 9 billion Pakistani rupees invested in green financing. This is just a few. On social front, UBL partners with Selani Welfare for food distribution and thalassemia support. It also promotes female leadership through She Rise initiative and Bano Kabil programs. The bank's strong governance improves stakeholders' ability to perceive and translate into economic benefit. The ESG excellent standing means that UBL's investors will now demand lower risk premium than they would have actually. Moving on to peer analysis, we can see that while MCB and HBL lead in solarized adaptation, UBL leads in female adaptation in their workforce and in digital.
Okay, thank you. It's good that you have also included Monte Carlo simulation, so that's a plus for you. Regarding your valuations, you have mentioned that you have preferred residual income, right? And you mentioned that justified price to book is not preferable, but can't you adjust justified price to book based on sustainable ROE?
No, yes, that's an excellent point. And the reason for that is in our forecast, we are projecting excellent income over the next 5 years. And so we are projecting relatively high ROEs compared to what we would use for a sustainable ROE in the next 5 years. And we do want UBL's valuation to realize the full benefit of those supernormal gains in the next 5 years. And so over the next 5 years, we use residual income to realize the full benefit of those supernormal ROEs, and then we phase out to a more moderate and sustainable ROE, which we have taken as 23%. It's a bit higher than UBL's long-run ROE. However, we feel that this advantage is fairly granted to them because they hit an inflection point in 2023, 2024 with regards to how competitive and how aggressive they are in growing their deposits and in making use of the options they have available in terms of treasury carry.
Okay, my simple question is, can justified price to book method be adjusted for the abnormally high ROEs for the first 5 years?
Yes, you could use a multi-stage justified PB, but then you would be sort of approaching a residual income anyway. So I think residual income is the more technically correct model or technically sound model to use here.
Basically, you use an 8% growth rate in your terminal in your valuation. So what is the logic of using 8% growth rate?
100%. So our 8% growth rate is grounded in, it's sort of at a midpoint between long-term expectations of inflation and of nominal GDP growth. I have seen that the sell side consensus currently is to use around 9%, but we remain a bit more realistic, a bit more objective, and we feel that this 8% figure, which is also empirically backed by our sustainable growth formula, which of course is ROE into retention ratio, I feel like that's the more realistic and the more disciplined approach to use here.
Okay, because I was looking at your model, it was the ROE was north of 30% for the last 2 to 3 years.
Ji.
Yet you use the sustainable ROE of 23%. Even if you use the Gordon growth model, your retention ratio is around 40% and your sustainable ROE is 23. Shouldn't 9 to 10% an easy call for the long-term growth rate? So just wanted to know the logic of penalizing the growth rate.
Ji, 100%. 9 to 10% would obviously be a reasonable assumption as well. But I feel that 8% is more sound in the case of UBL because it's a very mature bank. It has already squeezed as much as it could out of the lemon. And so 8% I think is the more realistic assumption to use here, given that they've already harvested or acquired a lot of the market. And then further, long-term growth that is generous, I think 8% is more preferable than that.
For the high ROEs for the next 5 years, what are the value drivers for this bank? And do you feel that it will not be relevant post 2030? What are some of the factors which you have assumed?
So we are currently in an expansionary cycle. All the indicators point towards that. And the main driver for this is, well, there are a few. But first of all, we have growing deposits. We do forecast deposits to grow at around a 15 to 16% CAGR over the next 5 years. We have high income through treasury carry because UBL, of course, is highly leveraged in terms of repos and PIBs on borrowings on the liability side, and then we have on the investments, government investments on the other side. And so we forecast high income from that as well. So we do phase that out over the period. That's also supported by a very low CIR. UBL recently reported a 29.6% CIR, and we feel that that is going to go upwards, but only very slightly. We feel that that ends at about 31% in those next 5 years. And so 3 of those factors combined lead to supernormal returns over the next 5 years as well.
What is your ADR forecast going forward for the next 3 to 4 years? Like, do you forecast them to increase the ADRs, move away from investments, or no, you feel that they will remain heavily, invested towards?
So I will answer the first part of this question, and then Afan can take it from there, or Safi, I believe you can take it from there. We don't feel that they will, move away from government investments and go towards, a higher share of advances. Actually, we forecast advances, the ADR ratio to dip even further. It's currently at 23%-ish, which is already very low compared to the industry, but we actually forecast for it to go even further down to 22%. And the reason for that is, why go for volatile private sector credit when you can just as easily go with a risk-free or riskless arbitrage in repos and government securities? UBL does not really have that incentive, especially since they've abolished the ADR tax. Previously that was there, so that was pretty much forcing all the banks, even though they didn't want to, it was forcing them to go with a higher number of advances than they would have. But now there's really no incentive for them to keep lending to volatile private sector credit.
Continuing with that, ADR ratio could be bifurcated into the advances forecast and the deposits forecast. We have seen a strong co-movement with private sector credit growth with the advances part. That's why we can see that the private sector credit growth minus the crowding factor is the primary basis for the advances growth. And secondly, the deposits have a material momentum over the past few years. So we are actually believing it to carry out that momentum and then forecast the ADR ratios.
Hello. Your presentation was more premised on the investments and the interest income side. अगर आप थोड़ी बात कर सकें on the NFI income side पे कि जो UBL की जो profitability है वो कितना percentage will contribute, the NFI will contribute towards the total profitability, and उसका major drivers क्या होंगे बैंक के लिए?
In our valuation, we have seen that for the fiscal year 2026, 84% of the interest income is investment led. So we could see that the greatest sensitivity to the profits are through the investment led government securities. So what we are believing is that there is a huge sensitivity on the policy rate. As the policy rate would continue to ease in, we could see there would be a greater risk to the profitability due to that policy rate easing out. So that's basically our rationale behind that, the profitability.
And I would add, in terms of non-interest income, we have carried out the following forecasts, and you can see that non-interest income mainly makes about 20 to 30% of their net interest income, and that is then offset by the operating expenses.
Okay. UBL recently has experienced very strong growth in their current accounts. Can you mention some of the strategies that UBL has deployed in raising current accounts? And I would like to see someone else participating other than you.
So within the deposit side, we have seen the current accounts being as I have seen, the deposits have a momentum in the previous years. So we could first of all link that to the corporate governance and the changes in the leadership. That like for example, we could tie that to the change in the CEO, who is a very dynamic CEO, and that actually reflected in the changes in the code of governance. Second of all, that UBL is basically tied between the two regulatory frameworks. One is from the LSC, and the second is the Pakistan's own code of conduct. So it is basically regulated by two bodies, the UK the regulatory body and the Pakistan regulatory body, which have really impacted its strategies and its dynamic leadership, leading to the current account expansion, as you have been questioned.
Okay. Anybody else would like to add something on the current account side? What has led to phenomenal growth in the current account? Would you like to add something?
Yes, I would add that they have been very aggressive in acquiring market share from their competitors, and they have tried that. Part of this comes from their massive initiatives towards digitalization, and we now know that they have around 11 million digital accounts. So they are competing on that front as well. That has been a large part of why they have gained popularity so quickly. Digitalization, and then also we see in the non-interest income, a large part of that is expenditure on IT. They are also doing that to gain a competitive advantage over their peers.
How has UBL done on the Islamic banking side? Any numbers, any color on that?
So basically, we have not explicitly modeled using the sum of parts approach. We have not bifurcated the Amin fund, the UBL Amin fund, and its conventional banking. However, using a combined residual income approach, we could see that the Islamic banking fund basically caters to the increasing demand of appetite for Islamic securities, Islamic investment securities. Thank you.
Thank you.
Ladies and gentlemen, we are taking a short break for Asr Namaz. We will resume at 5:30 p.m. Please be seated on time. Thank you. Ladies and gentlemen, please be seated. We're about to begin with the session again. Welcome back, everyone. Please be seated. I now welcome my next team, which is Alpha Hedgers, for their presentation.
Hello.
Good evening, everyone. We are Team Alpha Hedgers, and we are here to present equity research report on UBL. We present a buy stance for UBL with a target price of 559.4, which implies 31.8% upside based on last closing price on December 31, 2024, which was 424.6. UBL is currently trading at a discount as compared to its historical averages with a PE multiple of 8.6 times and forward PB multiple of 2.1 times. We expect UBL to continue to offer robust dividend yield of 7.5% and ROE of 26.1%. Before we talk about UBL stock specifically, I would like to highlight some key industry trends. The first key industry trend is the private sector being crowded out. The IDR ratio stands at more than 100%, and ADR stands at is stagnant at 40.34%. Islamic banking assets and deposits have grown from 17 and 19% to 21.6 and 26.5% in the span of 4 years. The complete conversion to Islamic banking is also due by 2028, and UBL is also shifting its focus to Islamic banking and has grown its Islamic banking branches by 141 in the last quarter. UBL is also classified as DSIB, which is Domestic Systematically Important Banks, alongside HBL and NBP, and they face stricter capital adequacy requirements. And SBB data shows that capital adequacy ratio has been comfortably met by Pakistani banks, and the other key industry dynamics include rollover remittances, higher taxation, and stricter competition because of low switching cost between banks due to payments, RAS payment systems introduction. Over to Abdul Aziz for financial analysis.
Thank you, Mohsen. As the deposit wars in the industry has heightened, it's not working. So as the deposit wars in the industry has heightened, UBL has came out to be one of the clear winners in it. UBL has increased their deposits at almost 4.6 trillion rupees, which is the second highest across the industry. Essentially, they are also expected to take over the industry leader soon as well. Now, this has resulted with their, so this has been fueled by the current account growth as well. This has been fueled with the current account growth as well, which is currently standing at 1.68 trillion. With this increase, this gives their balance sheet a headroom and a flexibility that they need to carry out their strategy. Now, their strategy is a bit unique one. Their ADR currently is at 23%, which is lowest across the sectors. They have recently reduced their NPLs by 50 billion rupees, which is essentially indicates that they have written off their NPLs, although it is not organic through recoveries. This shows that they are more on the conservative side and have more heavily invested into the IDRs. Now, this is where UBL has clearly set itself apart. So they went into the OMOs And at one point, they were holding about 48% of the balance sheet, of the OMOs in their balance sheet, essentially indicating that half of the system's liquidity was with UBL. Now currently they have reduced it by 540 billion rupees, showing discipline, and are currently at 44%. Now with this increase in their liquidity, they had to convert it into the sustainable earnings. So how did they do that? They converted it into the PIB T-bills, floaters. As we can see here, that almost 49% of their investment book is more than 5 years in contractual maturities, and their PIB floaters, the 10-year ones, have a weighted average maturity of 9.2 years with a alpha increase, alpha over T-bills of 138 basis points, which indicate that their earnings are sustainable over a long term and resilient. And now Hassan will be taking over for the income statement.
Now, moving towards the income statement, UBL focuses on absolute scale rather than NIM strategy. So, by expanding their earning assets, they have achieved significant year-on-year growth on their net interest income pool. Net interest income pool, and also they have achieved high growth on net interest income pool. Moving on to by mechanically expanding their net interest income pool. Sorry. So essentially, what they've done is that their cost to they have been very efficient in their costing, as well as by essentially giving the cost has been the their net interest income pool. So essentially, their cost they have been very efficient as well by minimizing their cost and not letting their expenses have risen, but they have risen in line with their deposit growth. Now moving on to the next slide, which is domestic systematically important banks. So UBL has been a part of domestic systematically important bank along with HBL and NBP. So the CAR requirement of both HBL and UBL has been 13%, and that of NBP is 14%. All other banks are required 11.5%, and all other banks are required 11.5%, and UBL has the key here is the headroom, and UBL has been comfortably able to maintain the headroom, which is essentially important for the dividend payout flexibility. Moving on to the ADR linked taxation risks. So the ADR linked taxation, resurgence of ADR linked taxation could result in pressures on effective tax rates and force asset reallocation, while we remain optimistic about the outlook of the current tax rates. Now Hiba will continue with the valuation.
Right. So UBL, we have valued UBL using a blended framework approach, where we are calculating a target price of 559.4, which is a 31.8% upside from the last close of 424.6 based on 31 December 2025. We have used two valuation models. The first one is the dividend discount model along with justified PB, and have given a weightage of 80%. Other than that, we've also used residual income method, where we are calculating a target price of 595 with a weightage of 20%. Now let's dig into dividend discount model a bit deeper. So in the last 9 quarters of 2025, UBL has given a dividend of 21.5 per share. Taking that into account, we have forecasted a dividend for the next 3 years to be at 32 per share, the fourth year to be 36 per share, and then in the 5th year it is 40 per share. Overall, the discounted value because of the dividends is coming out to be 140.2 per share. Other than that, we've also included justified PB at a rate of 3x. We have concluded that value with the from ROE and growth rate of 12%. We have also included a cost of equity at 17.1%. We have used a beta of 1.02. This is based on the last 1 year historical average of UBL. As far as the residual income method is concerned, we have reduced a target price of 594.9 per share. This is basically to check the robustness of the model, and it basically tells us how much return is UBL able to generate over and above its cost of equity. So because UBL is persistently showing a positive residual income, so this just takes off with the fundamentals as well. Now Kainat will talk about the investment risks.
Now moving on to the investment risks. We identified 5 risks, of which I will be talking about the 2 based on high impact and probability. So first, the interest rates. UBL has 96 billion unrealized gains on its balance sheet, which is approximately rupees 38 per value per book share. And if the yields increase, these gains would reduce. So then second is the leadership continuity. UBL operates a highly leveraged balance sheet, and that kind of structure requires consistency in execution. While leadership transitions are quite normal, the question arises whether the strategy or the philosophy will remain consistent through the transition period. We see this as more of an institutional risk in the absence of a publicly disclosed succession plan. Moving on to the ESG, this is where UBL really stands out. We used a Morgan Stanley style methodology and allocated weights to each. The final weighted EHC score came out to be 8.46 out of 10, places UBL third among all the banks in the industry. We allocated a higher weightage to environment because in Pakistan's banking industry, this has the most direct impact on cost and risk and translates directly into your bottom line. For the environment, they worked on digitization and green financing. They've allocated 9 billion rupees for energy financing. For the social, they worked on financial inclusion, workforce diversity, youth hiring, and employee well-being that reduces their turnover. For as part of the governance, they have a well-structured board, oversight, audit committees, and governance integration. So overall, we believe that the UBL strong
I noticed in the presentation you mentioned a point about interest rate risk. If the interest rate increases, it would erode the unrealized gain of the bank. But wouldn't the increase in interest rate also increase the net interest income on the current account as well, so nullifying the impacts? So if I ask you a simple question, what is the interest rate sensitivity of 1% on CY26 earning? Can you give a rough idea? Would it increase or decrease?
So in terms of the complete earnings, since UBL is also invested heavily into the government securities through the OMO repo strategy, as we talked about. So there is a time lag pattern as well in terms of OMO and repo strategy, and there's also the compounding factor. So keeping in mind that if the interest rates increase up, their earnings should reduce down.
UBL's balance sheet is highly leveraged, right? If interest rates increase from here onwards, what will be the impact on the profitability and the valuation going forward?
So again, in terms of profitability, since I talked about the time lag factor, so the cost would go up and the compounding factor thins out the spreads in terms of when the interest rates increase. And in terms of valuation, Hiba?
Yeah, so the valuation would increase, therefore.
Sorry, it is supposed to decrease. We stay.
Can you quantify a bit how much? For example, if interest rate increase by 1%, how much will its valuation or profitability be impacted?
So we did run a bit of a sensitivity, not on the whole earnings, but in terms of if interest rates currently increase from 10.5% to 11.5%, there the 138 basis point alpha that they have will decrease to 0.83 basis point in terms of the because of the compounding of the OMOs, indicating that assuming that there will be a 14-day period.
Do you remember what's the average duration of UBL's investment book?
Yeah, the weighted average maturity is 9.2 years for the 10-year PIB, which was...
The whole investment book I'm talking about. Okay, thank you.
What are your interest rate assumptions going forward? Policy rate?
So we assume that the interest rates will be stable to declining since the macro factors are now improving in the country, and historically whenever the macro factors are in the favor, the interest rates, the inflation has been 8%, and we did a conservative side that 2% increment, so we assume that it will be stagnant at 10% going forward.
And did you conduct any kind of sensitivity on the interest rates to its NIMs?
We did not run a sensitivity on that.
Can you mention the current return on equity of UBL Bank?
expect it to be 26.1% and CY 2026.
And for CY 25, do you have an idea?
Okay, so it is mentioned in this, I think, this slide. This. No, we have not added in the snapshot of the appendix, though.
Okay, so it's about 30%, but can you break it down into how much of it is leverage driven and how much of it is structural?
I think greater percent of it is leveraged.
Can you give a quantification of it?
Because it is operating, as Kainat mentioned, that is operating on a leveraged balance sheet.
Right.
So UBL's strategy has been like, the book has been very leveraged.
Yeah, that's right, but can you quantify it? What extent is it leverage driven and what extent is structural in nature?
So we do not have the exact percentage, although the majority of the net interest income is derived from the government securities, and that has been financed through OMO. So that is the leveraged part. And now since they are retiring by 540 billion, we expect them to keep retiring since they have the increased deposits as well, especially the current accounts with the lower cost. So we do expect them to keep retiring and deleveragifying, but we do not have the exact percentage though.
Okay.
The method, how did you calculate the operating cost in your model?
In terms of operating cost, what we did was that we we assumed that it would be based on branches. So first we forecasted how many branches they would be adding, seeing the historical addition, and then we came with the operating costs.
Your operating cost to deposits have been steadily rising in your assumption. So this is a conscious decision on your part, this assumption? The operating cost to deposit ratio is rising in your model in the future. So have you, is this for some reason, or is there some factor you are increasing the operating cost per deposits?
So when we were researching about UVL, we found out that they were heavily adding on the branches, heavily investing in terms of their employees, and there was an increase in their employees as well. So what we assume is that although the deposits, right, there is a deposit war going on, and there is an increase in deposits, but it will essentially cool down the line, and that will result, the employees will still be there, the branches will most probably still be there, and they probably would not reduce down to not have negative upticks, and that is why the ratio is assuming the growth will cool down, the fixed cost of operating will.
Just adding on to that point, that there has been a recent acquisition or a merger with the Silk Bank, so this has also increased their operating costs because of the expanded branch network.
What are your deposit growth rates estimates for the industry and for UBL going forward for the next 5 years?
Okay, so just a second. Yeah. So this is the current account mix and funding mix for UBL and also the industry. We expect that UBL is going to capture more growth, and recently it has also surpassed NBP in the capturing of
overall deposit growth rate assumptions for the next 5 years for the industry and for UBL.
So we do have it in the model, but we do not have it in the slide. So we So how we got the number of industry deposits forecast was that we saw the numbers from State Bank of M2, and we used a ratio that through regression that, for example, how much GDP, we used some of the research reports by the leading equity houses, that how much GDP we expect in the future in 2027, 2028, and how much is that related with the M2 increase. And using those numbers, that is how we got to the industry deposit, and we allocated a specific ratio of that to UBL. That is how we got to the numbers.
Okay, in your model, your deposit growth assumption is 20% for 26, after that 15%, and after that 13%. But your net interest income is only increasing by 3%. So any reason for the deviation?
So coming back to the OMOs repos again, we do expect them to keep on retiring the OMOs as they have done with the 540 billion reduction. So that is why, okay. So that is why it will reduce down in terms of their net interest income.
Okay, so can you mention some of the strategies that UBL has employed in order to phenomenally increase its current account, as you have mentioned?
Okay, essentially first they have acquired the acquisition of Silk Bank was mentioned. So they've increased their branch networks a lot. So they've targeted areas where, specifically targeted areas where there's high demand, and and 24 and services like improve their services where 24 hours requirement was there. So they've opened the banks for 24 hours, and opening on weekends was also their policy. So it has become customer centric more.
I think you've covered it.
Thank you.
Thank you, Team Alpha Hedgers. It was a wonderful presentation. Now, moving on to our next team, which is Team B for the next presentation.
So when we talk about banks today, is it really about growth or monetizing efficiency with the best balance sheet management?
Chances are efficiency has flown under your radar, and that's exactly why the answer is one, UBL.
Ladies and gentlemen, Assalamu alaikum. This is Anusha, and Team B initiates a buy call for UBL with a target price of 643 and an upside of 32%, along with 7% dividend yield, translating into a compelling 39% total shareholders return. Dear investors, our investment thesis is built onto 4 key drivers. Number 1, investment mix. UBL is heavily investing on government securities, making a long-term low-risk portfolio. Secondly, deposit. Post-management shift, deposit grew at 91% from third quarter 2023 to third quarter 2025. Thirdly, efficiency. At just 6% cost to current account, UBL is the most efficient compared to its peers. And lastly, balance sheet optimization. Even after having high payout ratio, a strong 24% capital adequacy ratio gives UBL the safety buffer, and it is also well above the regulatory requirement. With that being said, coming on to the banking potential of Pakistan. Pakistan is undergoing a major structure shift due to regionalization, as women bank account has also increased from 13% to 47%. This has also decreased our cash in circulation from 29% to 26%. Also, banks are now moving from basic lending to more smarter finance choices, as recently the deal between Jazz Cash and UBL. Also, SBP has also revised its CRR requirement from 6% to 5%, further supporting liquidity in banks. Now, in order to get us into the financials, I will hand it over to Ilyan.
Thank you. For investments, this is where UBL thinks strategically, taking advantage of government securities with 4.9 trillion rupees in long-term PIB floaters, which is 59% of its investment books for almost 9 years, which is financed through open market operations, with a spread of 138 basis points, which is significantly above the spread of 63 basis points as of December 2025, which give banks an edge in its interest income. With this strategy, UBL's current results shows an IDR of 185%, which is almost 2 times of its deposit, showing banks' preference for secure, low-risk investments. But what supports this stance? Its deposit, which have grown impressively from 1.7 trillion rupees in 2020 to 4.7 trillion rupees in current results, showing strong post-management shift, mainly through branch expansion. In addition, UBL's current account has also increased from 33% to 50%, which means UBL has 2.35 trillion rupees as low zero-cost deposits. And Islamic deposit added 600 billion rupees since 2022, making the bank third largest Islamic deposit in Pakistan. With the fundamentals set, now my friend Daniel will tell more about the bank's cost efficiency and balance sheet optimization.
Thank you, Lian. UBL benefit starts with one simple fact. It is acquiring customer lowest in the industry. Instead of using traditional cost to income ratio, we have used cost to current account ratio to evaluate how the bank is efficiently getting the low deposits. Overall, the 5-year growth of UBL stands at 6%, whereas MCB and ABL stands at 7%, and HBL being the highest cost to CAR ratio of 10%. This shows that UBL is achieving growth without paying highest cost, and deposit mobilization is efficient. Now coming to the next slide, it shows that UBL is consistently maintaining its efficiency while growing aggressively. Its operating cost grew up to 39% and branches grew up to 27%. However, UBL cost to car ratio remains at 6%. This shows that despite of heavy costs, UBL is maintaining their discipline in cost efficiency. Now, the question arises that if a company is so efficient, how does its balance sheet optimization looks like? Here, UBL stands out. It delivers growth, payout, and safety at the same time. UBL capital advocacy has remained above the regulatory requirement, and sometimes it also surpasses the industry average. UBL being in the DSIB list have the minimum, as of June 2025, has the minimum buffer of 10%, and also it continues to deliver growth and payout. While in comparison in NBP has a good capital, but it started to pay out in 2024, while HBL has a safety concern because it has a minimum buffer of 4%. Now for valuation, I would like to call Salman.
Thank you, Daniel. In a volatile market, certainty is the most expensive asset, and UBL has locked it in. We valued UBL using an equal weighted blend of justified price to book and price to earning and residual income. It yields a price of PKR 708 from residual income, whereas a price of 611 from justified multiples, triangulating into a target price of PKR 643. Also, we deliberately extended our forecast horizon to 10 years. But why? Why not a traditional 5-year forecast? The answer is precision. As of second quarter 25, UBL holds 9.2-year floater PIBs with a spread of 138 BPS, whereas as of December 25, market offers only a spread of 63 BPS. A traditional 5-year forecast would assume that these premium spread would last forever, which is not the case. Therefore, we had to extend our forecast to 10 years. Also, we had to ensure the ROE we use of the year 2035 is sustainable and is also normalized. So a 24% ROE, and this also justifies as the 12% terminal growth rate we use for valuing UBL. We also calculated beta of 1.02, which is calculated via a 15-year regression against the KC 100, and a 6% market risk premium, reflecting the historical excess return of market over sovereign bonds. Now, validating these intrinsic numbers, let's move to the market perspective. As you can see on the left, our target price of 643 lies comfortably within the range of justified price to book and justified price to earning and residual income, confirming a significant upside from the last close of 487. But if you see on the right, you will see a bold decision, 0% weight to relative valuation. But why? Why ignore the market signal? Here's why. As you can see in the blue bar, UBL's implied relative P2B arrives at about 1.7 times, whereas it is significantly lower than the current trading multiple of 2.7, which means that the market is currently trading at historical low. Therefore, a fundamental valuing UBL through relative valuation is we also did sensitivity analysis. As you can see on the left, our target price is very resilient to growth and cost shocks. And also, as you can see on the right, we modeled extremes. As you can see, our target price is PKR 889 with the 82% upside. But we assign no probability to it because an increase in policy rate is often followed by mark-to-market losses, which we haven't included in our forecast. Also, in our bear case, the target price only goes down to about 2% to 479. So you know the trade-off. Now, the returns are only sustainable if they are durable. I would like to call Manal to explain the ESG.
Thanks, Salman. UBL treat ESG as an engine, not a cost center. Decarbonization is quietly taking weight off the income statement. 163 solar power branches and full LED rollout reduces the energy drag, while PKR 9 billion in green lending acts as a revenue lever. On social, workforce inclusion supports growth, with female workforce participation has increased to 23% in 2024 by stating a target of 45% in 2025. Combined with UBL women-focused product like UBL Aruj account, 35 PWD-enabled branches, and stronger employee welfare, expanding the customer base while anchoring talent for the long term. Now let's talk about the SDGs. UBL ESG activity is mapped directly onto the financially material SDGs. Partnership with Salani and Ahuad channels capital into scalable microfinance, while Investments in education and healthcare promotes economic productivity over time. Most importantly, workforce innovation and net zero by 2050 roadmap. Extended finance remission shows that ESG is embedded into our balance sheet and operational model rather than treated as a standalone CSR. Now let's move to the governance. It is the strongest pillar with 1/3 independent director, 11% female board representation, and full compliance of risk enhances the transparency. Furthermore, alignment of IFRS S1 and S2, Pakistan Green Taxonomy, and global frameworks enhances the transparency, which we believe earns UBL a trust premium. We calculated UBL ESG score at 6.1, considering MSCI and S&P Global Industry Materiality Lens. Now, I would like to call Salman to brief on investment risks.
We also identified some key downside risks to our buy recommendation. One of the key risks we believe is the funding liquidity. Right now, UBL has the highest exposure to repurchase agreement of about 5.3 trillion. If SBB decides to halt OMO, it can cause serious liquidity crisis to UBL, but UBL can insulate itself by liquidating its 540 billion T-bills. So that can cause a shield to UBL. So for the market, it is United Bank Limited, but for us, it is unrivaled efficiency, best-in-class books, and leading returns. Thank you. We open the floor to questions.
Okay, so what basically prevents MCB or banks like HBL to copy the strategy of UBL of leveraging and increasing current accounts?
Sure, I would like to take a stab on that question. Basically, current accounts are the best thing a bank can have because a bank has to pay no interest on it. But what differentiates UBL from other banks is basically their strategy. As you can see on this slide, UBL had the same exposure to current account as although the question you are asking, MCB also has 48% in current accounts. So the peers are not too far away from UBL. So, but UBL has a better exposure to current accounts because of its strategy. Especially post-management, the deposit growth has been about 38% CAGR, whereas pre-management shift, it was about 14% from 2020. So it's basically the strategy which UBL is utilizing.
And I also like to add that their Islamic branches also increased, and their branches were decreased from 2022 to 2023. But after post-management shift, their branches increased, especially Islamic branches, to 669 branches till third quarter 2025. This also makes their deposits grow at a CAGR of 38%.
Okay, so I think you ran out of time. You were about to present the investment risk, specifically the interest rate risk.
Yes.
And in your present report as well, you mentioned that there is a positive impact of the interest rate increase on the floater, but a negative impact on the fixed.
Yes.
So I just wanted to get a holistic picture that how would interest rate impact UBL valuation and earning? Would it gain if the interest rate goes up or it goes down? So
well,
overall picture.
Sure, I would like to answer that question. That's a really excellent question. The thing is, it depends. UBL right now has 20% of its investment portfolio in fixed, whereas 59% are in floaters. So an increase in interest rate would incur mark-to-market losses only on those 20% fixed portfolio, whereas the 59% are floaters and they will move with the interest rate. So basically, the risk is only attached to at 20%, whereas the floaters are better moving with the market.
Net impact, 1% interest rate would benefit or UBL, or it would decrease its earning?
1% interest rate increase would basically improve the UBL's earning. But high increase because UBL has fixed PIB floaters of 14.9%. Any interest rate reaching that level would halt UBL's valuation. And obviously, increase in interest rate would also increase the cost of equity, which will affect the valuation of UBL.
And how will it affect the valuation of UBL?
Well, as I just mentioned, a slight increase is going to benefit UBL because of its 59% exposure in floaters. But if the interest rate increase, the cost of equity risk-free rate is going to increase. And an increase in risk-free rate is usually going to impact the cost of equity. And if the cost of equity increases, the valuation goes down.
Right.
I think you are the most bullish on UBL when compared to other teams. Given your stance on UBL and its profitability, how do you see its dividend payout increasing going forward? And secondly, what factors does a bank see before deciding on the dividends?
Sure, I would like to answer that first question of yours. While we were analyzing and we were making our model, we were confused what to take the payout ratio of UBL, because in the last 4 to 5 years it was very volatile. So we chose a normal payout ratio of 50%, which aligned with the cash dividend which UBL is paying right now. So I would like you to can you please repeat your second question? I couldn't grab it.
My second question was that if UBL decides to increase its payout ratio going forward, what factors will the management see while announcing a higher payout going forward?
Sure. Based on our model, if the payout ratio increase, retention ratio will go down and ultimately impacting the growth rate, and the impact on growth rate will eventually affect the valuation. But management should see, first of all, its CAR requirements as explained in this slide of CAR here. So UBL maintains a very strong buffer even after growth. Their risk-weighted assets are increasing, and they are paying sustainable payouts, and they have the buffer. Whereas the payers, especially the DSIB list, don't have the same thing. They have to compromise on one thing. So we believe UBL has a very strong position to pay sustainable dividends for at least for the next 2 to 3 years if the market stays same just like right now.
Can you open the slide where you showed the valuation section, and can you explain the RIVM model valuation that you did for the company?
So, sure. The clicker isn't working. Sure. What was the question about the slide?
Can you explain how did you arrive at your target price using the RIVM model, the residual income model?
Residual income model.
Yeah.
So basically, residual income values companies based on their economic profits. So we took the, actually I have it in the appendices, I can show you, but I hope the clicker works. Here it is. We first took the net income and the beginning book value of equity and equity cost on the book value of UBL. We took the cost of equity and multiplied it by the book value, and in this way we got the excess equity return, and we discounted it to December 26, and we added it all back, and we calculated the terminal value, calculated its present value, and then added back to the present value of all the future excess book value, added the beginning book value of equity, and divided by the number of shares, and in this way we arrived at a target price of 708.
What was the discount rate that was used?
Discount rate was, it's mentioned here, 17.81%, cost of equity, same as.
Okay, if UBL increases its retention rate, what will happen to its valuation as per your model?
So if UBL increases its retention ratio, an increase in retention ratio will increase the growth rate, and increase in growth rate will eventually increase the valuation of UBL.
Right. So if, for example, UBL completely eliminates dividends, that means it's retaining 100% of its equity, and then that really increases its valuation. So why isn't UBL deploying that strategy? And if it does, what will, in your opinion, will happen to the market price of UBL?
Sure. Your question is, what if UBL stops paying dividends?
Right.
So based on, I can recall my valuation methodologies, justified price to book and price to earning. It's basically ROE minus growth rate. If UBL stops paying dividend, which means it has a retention ratio of 100%, it would mean that growth rate would be equal to the return on equity. And the return, if the same, our valuation methodology of justified price to book and price to earning would reveal a zero value because the numerator would be zero. Whereas a very minimum value we will arrive at through residual income model, although we will have to use different methodologies to find what if UBL stops paying dividends.
And
Sir, I want to add like this, that UBL is not a manufacturing company, okay? So there's a limited growth in this sector. Like in 2020, when COVID-19 hit, banks did pause their dividends also, but this is very unlikely that banks will pause their dividends. So it will continue to give their dividends, and their growth is it's at a cap.
Okay, can you walk me through the justified price to book valuation methodology that you have used?
Sure. Here's the justified price to book. A risk-free rate of 11.67% is mentioned above. The formula on the left, return on equity minus the growth rate divided by the R minus G, we arrived at the justified price to book value of 2.06. Also, as I mentioned, we forecasted for the next 10 years. So we had to factor it in. A BVPS of 788 also multiplied by the justified price to book value. Also, that BVPS is the present value up till December 26. We cannot take the future book value because that will be a different thing. And we multiplied it by the justified price to book. We arrive at the TP of 371.28. We also added back the dividends of from 2027 to 2035, because in 2025 you are holding the, in 2026 you are holding the stock and you will get the dividend. So adding them both, we arrive at a target price of 611, and we also got the same price to justified price to earning mentioned here.
Just one last question.
Sure.
You have mentioned that you have not incorporated the relative valuation methodology.
Yes.
But देखिए आपने सारी आपकी assumptions जो है market based हैं. Risk free rate होगा वो भी market based होगा. आपकी cost of equity निकलेगी या beta निकलेगा. These are all market based assumptions. So why can't you also use relative valuation? वो भी एक market based valuation metrics है.
Sure.
So
First of all,
aren't you sort of triple counting in terms of आपने ROE की base पे सारी वैल्यूएशन की है, चाहे वो रेजिडुअल इनकम हो, चाहे वो जस्टिफाइड पी या पीबी हो?
Sure. The answer to that question is UBL is basically moving with the market, but UBL is different with its peers. In relative valuation, we are considering peers book value and peers multiples and comparing it to UBL's multiples, which we believe that UBL's strategy differentiates itself from the peers. And that differentiation is basically what made us move away or assign a 0% weightage to relative valuation. So that's the answer to it.
Just a quick question. If the UBL's CEO resigns tomorrow, what will be the impact on the stock price?
If UBL CEO resigns tomorrow, the thing is that the growth in UBL is not a one-man show. UBL is a bank which has been growing historically, although recent growth is amazing, but it's structural. We believe that the leadership is not based on one man. If the UBL CEO, Mr. Javed Iqbal, resigns tomorrow, UBL's leadership will bring and also the thing is that the UBL have played a long-term game. PIB floaters of 10 years. Fixed PIB of 2.2 years. So basically these long-term investments are going to benefit UBL. So even if Javed Iqbal resigns tomorrow, there is still the long-term strategy which is going to benefit UBL in the long term.
अगर interest rates increase होना शुरू हो जाते हैं, मिसाल के तौर पे, just hypothetically speaking, तो floater पे spreads पे आपका क्या ख्याल है? What would be the impact on spreads of the floaters going forward? आगे के जो floaters
sure
issue होंगे.
Sure. If there is a minimum increase in interest rate, that would be, we believe there would be no difference on spreads of floater. But if there is a high interest rate increase, just like in 2023, 2024, due to galloping inflation, we believe that the spreads will increase and UBL will incur mark-to-market losses on those PIB floaters. So that could have a devastating impact on UBL's valuation. But we believe the probability is very low. That's why we haven't incorporated in our model.
Thank you.
Thank you.
मसला ये कि मेरे पास लॉगिन नहीं हो रहा है।
Thank you, Team B. We will now take a short break for Maghrib Namaz and we will resume at 6:35. Thank you.
इसमें डाल दूँ? अगर इसमें डाल जाए तो हो जाएगा? ना मुझे दे। ठीक ठीक है। राइट बस मेरा रहेगा। Q&A इन्होंने अच्छा किया था, लेकिन ये है कि
मुझे लास्ट वाले लास्ट वाली लाइक द प्रेजेंटेशन स्किल्स वर बेटर, क्योंकि अगर हमने भेजना है आगे तो वो भी देखेंगे ना। प्लस ओवरऑल ठीक है, एनालिसिस उसका भी बहुत अच्छा था, बट आई डोंट नो व्हाई दे मिस्ड आउट ऑन मॉन्टे कार्लो। सब कुछ तो किया था, दे कुड हैव एडेड दैट आल्सो।
हाँ नहीं
सेंसिटिविटी और रिस्क वाला
हाँ वैल्यूएशन
लेकिन ये मैं इस पे मांग दूंगी कि इन्होंने सोचा कि 10 इयर्स तक लेके जाओ, ROE नॉर्मलाइज करो, और अगर डिविडेंड्स को डिस्काउंट कर दिया है तो ठीक है, और बुक वैल्यू को भी डिस्काउंट किया है ना दोबारा।
हाँ मुझे यही मसला लग रहा है।
मुझे ये क्वेश्चन है,
ये
इनकी बुक में कुछ था, इनकी
नहीं दूसरा रेजिडुअल इनकम निकाल लेते ना 2025 को भी वो इनकॉर्पोरेट कर रहे थे, ठीक है ना, तो वो मुझे इसमें थोड़ा सा डाउट हुआ क्या हाँ
Welcome back, everyone. I request everyone to be seated. And I would also like to request Mr. Faraz Bandukta to come for recitation of Holy Quran.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد صدق الله العظيم.
Assalamu alaikum, respected Chief Guest Mr. Farooq Sabzwari, esteemed judges, mentors, graders, faculty advisors, our outstanding student participants, members of the CFA Society Pakistan, and distinguished guests, good evening and a very warm welcome to the 19th Pakistan final of the CFA Institute Research Challenge. So this is truly a global competition with it being run last year in 120 jurisdictions with 7,000 students participating from 1,100 universities. This year, Pakistan also saw a very high level of participation from the universities, with 31 universities, 55 teams participating. And that led us to engaging over 100 volunteers from the industry. Happy to report that this project started 6 months ago with a call to participation, and we had over 16 universities from Karachi and Sindh area, including Nawab Shah and Sakhar. We had 7 universities from Lahore, including, and the suburban areas, including Multan and Faisalabad, and from within the capital city, Islamabad, we had 8 universities participating. Of course, the effort of the volunteers started with the mentors. We actually ran out of CFA charter holders in the market. I mean, there's so many teams which have participated. I'd like to acknowledge the effort of mentors. And the mentors were allowed 6 hours of engagement with the teams to help them understand how to build a financial model and also how to develop an investment thinking. May I request a big round of applause for the mentors? I know all of them. I understand all of them are not here because some of them were outside the city, but nevertheless, their contribution is no less valuable. I also want to acknowledge the effort of 2 of our volunteers who stepped forward with their expertise, and thank you Saad and Waqas for conducting training on financial modeling and how to write an equity research report which they conducted for the students. Moving on, of course, there was a whole grueling process of grading. I think graders who are present here, I really want to acknowledge your efforts, and I know that it was such a tight timeline. I'd like to briefly also walk you through the process that we had a group A, B, C, and D of traders, and the reports were divided between the first 3 groups, and the top 5 teams from these 3 groups were then handed over to the 4th group of experienced professionals who re-evaluated. So every report probably has gone through 8 to 9 pair of eyes, and there's a lot of effort gone into ensuring there's transparency, fairness in our grading process. And of course, thank you, the judges who are here with us today, Rizaza, Mohammed Shehbaz, Asim Wahab, and Sana Abdullah for taking time out and doing the due process. The last year's judges, last year's winners were Lahore University of Management Sciences, the runner-ups were IBA, and the global challenge was won by University of Poland. So this year also the top two teams, the winner and the runner-up, will move on to the sub-regional round, where you will compete with Bangladesh, Sri Lanka, and India. I'll repeat, Bangladesh, Sri Lanka, and India. So we're hoping that you'll be able to compete and win against the Rafis and the Rafias and the Rafaels, or whatever comes your way. So hoping that we'll bring it home. Lastly, I'd like to speak to the students who are here with us today and those who have joined us through our live stream on YouTube. We have, a very experienced set of audience here, and you have the CEO of PSX, quite a few CEOs here. So I would request you all to use this opportunity, use this platform to connect, to learn, and to not just see this as a competition, but as a platform to grow. So with this, I will request our president of the CFA Society Pakistan, who is also the CIO of MCB Funds, Mr. Mohammed Asim, to please join me here on the stage for his welcome address.
Assalamu alaikum, everyone. Honorable Chief Guest, Mr. Farooq Sazwari, MD and CEO PSX, Senior Management of UBL Bank, Farooq, Chief Strategy Officer from UBL, other senior members from the UBL leadership. We are informed Mr. President of UBL, Javed Iqbal, had a last-minute travel, so he could not join. However, we have full support from the UBL's management team, for which we are really thankful. So honorable faculty members here, the students of universities, my fellow colleagues from CFA Society Pakistan, and our volunteers at the different levels of the competition. As Sawat mentioned, it's now becoming a huge competition with 31 universities, about 55 teams. So you can imagine the activity that is happening throughout Pakistan, throughout business schools from all over Pakistan, and a huge administrative challenge as well. And Sarwat, one of the challenges mentioned was the availability of the graders, the mentors throughout the challenge. So it would not have been possible without the sincere, selfless effort of all the professionals, volunteers, starting from mentors who work closely with the university teams. And at the beginning of the competition, we had the presentations on valuation and financial modeling from one of our, a couple of our volunteer members. After that, we had a review of Imagine 55 reports, and from that, we picked up the final teams for this challenge here. So a huge round of applause for all those who have really contributed for their sincere efforts. When we were selecting company for this research challenge, I think from the Pakistan's market, when we looked at the overall environment, we had two companies to pick from. One was from the automobile, the kind of the environment that is happening in Pakistan. We thought that could be very interesting. And the other was the banking, where UBL also was one of the companies which was really challenging the landscape and really coming out as something which could be a huge learning opportunity. But finally, we decided in favor of UBL, and the reason was not just the UBL's dynamic, I would say, facets that it is evolving as a bank, but also that we were sure that UBL's management would be very supportive throughout the process. So that's why we picked UBL, because we thought that this is a company which is going to extend full support. And I'm happy to share that UBL's team had been there throughout the support that we needed for the allocated hours. So thank you very much for them. With that, I would just like to mention the students that the company that you were given has changed shape in terms of its valuation throughout the last probably couple of years, many times. And for analysts even, it has evolved as a different company after every 6 months. Initially, probably it was interest rate and treasury play. Later, it became a deposit play. Recently, it became a corporate finance transaction play. So it continued to evolve and it continued to challenge the valuation aspects, the revision in valuations. So I'm sure throughout your course of learning, updating of valuations, you would have reviewed your valuation forecast. And well, that was not just enough. My sympathies, because we had a panel which is very competent and one of the most analytical people in analyzing banking sector. So, and I could see from the questions that they did not spare you as students, but asked you as questions as analysts, which of course is a good learning experience. And I think that is the spirit of this challenge, that everyone allows you, invites you, challenges you to live as an analyst. So एक दिन probably research analyst के साथ is probably the evening that you can call. And in the end, I would like to appreciate my CFA Society team as well for managing this challenge, where it has been a huge effort throughout Pakistan, bringing all the universities together. And in the end, I must appreciate all the volunteers because you are voluntarily contributing several hours from your busy schedules. And all of them are extremely busy in their professional lives. But this is just a selfless, sincere contribution, and that speaks the culture that CFA Society has been able to thrive on in this market. So with that, I would like to congratulate all of you. For those who do not win, at least I can assure you the experience, the learning, if you have put in your effort, would enable you to be a potential analyst, be hired with a greater prospect to be hired as an analyst. I can personally speak from my experience that when we review resumes for potential analysts, if we see an experience in the CFA Research Challenge, that means you are at least 6 months ahead of your fellow university graduates or students. So I hope this learning would be a true value addition for you. And with that, I would now like to invite our representative from UBL, Mr. Farrokh. He's the Chief Strategy Officer, one of the members of CFA Society Pakistan. Pleased to share, he has started his career for a larger part as an investment analyst, one of the cheetahs of the banking sector valuation, so he himself understands the intricacies of it. And throughout his career, Farrokh has had distinguished aspect of the investment journey. He has worked as fund manager, as CIO, and now Chief Investment Strategy Officer of UBL. So with that, I would like to invite you, Farrokh, to please join the stage and share his comments. Thank you so much.
Thank you, Asim, and welcome everyone. I'll keep it short. Mohammad Javed Iqbal Sahab, our CEO, was meant to be here, but some last-minute travel meant that he couldn't. Javed Iqbal himself is a CFA, and he was the second president of the CFA Society of Pakistan. I think he was elected in 2008. A lot of the key members of UBL's senior team are also CFAs. Some of them are here as well. Manzoor Zaidi, our CFO, is here. He's a CFA. Adil Haroon, who heads Treasury for us, is a CFA as well, and amongst other senior members of our team. So I think this is sort of a great platform, and I encourage all of you who have been here, who have worked on this, to sort of look at this path and look at this degree as something which will define your careers. I have a short presentation, again with a view to sort of inspiring some of the budding analysts, people here who are at the cusp of their sort of decision making, and they want to figure out what path to take in their career. So I just wanted to show some things. So I'll start with a sort of a quote, and this is from Benjamin Graham, who's seen as the founding father of value investing. He was Warren Buffett's teacher at Columbia as well. And his quote is that for the average analyst, you'll do as well as someone from another industry. But for the above average analyst, sky is the limit. So this is not a career path which is linear. So if you're made for it, if you have the aptitude for it, if you have the interest in it, then, you know, I think I would highly encourage those of you who have that to follow this path. Just in terms of some data related to Pakistan, we often hear that the Pakistani stock market is run on speculation, it doesn't work on fundamentals. I think in the short term that's true of any market, but in the medium to long term that's not true at all. What this data shows you is that if you look at the KSE 100, and the KSE 100 is in any case the top 100 out of the top 600 companies in the country, but even within that, if you had invested in the top 25 companies 20 years ago, you would have made 152 times the money that you had put in. On the other hand, if you had invested in the remaining 75, you would have made 11 times, equal weighted, of course, 20 years ago. This is just to highlight the difference between investing in the top companies, in the better business models, in the compounders, versus the ones which don't make those kind of returns. And if you look at the beta as a measure of risk and volatility, it's actually lower for the top 25 compared to the other 75. So this is not return with additional risk, it's higher return, much higher return with lower risk. So that was sort of the whole market. I'd like to show you a couple of slides related to sectors. One is banking, in which we work, as well as, you know, of course, UBL is the subject company. So 20-year returns again in banking. The top two banks have earned a CAGR of 30%. The remaining sector has earned a CAGR of 14.6%. So had you invested in the top two 20 years ago, 1 lakh would be 1.9 crores, so 190x. And had you invested in the rest of the sector, excluding these top two, equal weighted again, it would be 15 lakhs, which is around 14.6%. That's not a bad return, but it just shows you the difference that can come from picking out the winners, the ones that do really well. The role of research here is not just to find, of course it is to find, but it is also to stay invested in these companies over the long term. I'll give you a personal example. Myself, out of these two banks, I'd found one of them very early on in my career, around 2006, 2007. But I think the finding part is slightly easier. The staying invested part is much tougher. As the role of research, the idea is not to keep changing your recommendations and going on to the next new thing. Albert Einstein said that compounding is the 8th wonder of the world. This kind of just shows that. So it's much easier to say this, much harder to actually implement, but nonetheless, this is the value of it. Again, very non-linear returns, if you see it that way. The other sector we'd like to talk about is cement. Again, one of the sectors with a number of companies. So if you see the top 4 cement companies, and by the way, the reason for selecting 2 banks and 4 cement companies is that these 2 banks stand out in terms of their returns, long-term returns compared to the rest of the sector. In cement, it's 4 companies at the top, and then everybody else is slightly lower. But had you invested 1 lakh in these 4, the top 4 cement companies, it would be around 26 lakhs. And had you invested in the rest of the sector, it would be 5.7 lakhs. Investing in the rest of the sector is actually yielding a lower return than fixed income. So with all the volatility and the ups and downs, it didn't sort of compensate you even for fixed returns, which is why we have the quote from Warren Buffett, "The time is the friend of the good business and the enemy of the mediocre." So again, research, the field of research, what you're expected to do is sift the wheat from the chaff. Understand what's a good company, what's a great company, and what's not a good company or a mediocre company. Again, so this is just a repeat of that quote. This is sort of all there is from our end, but I'd like to say that we'll be giving a little bit of prize money to the winners and runners-up today. One of my hopes is that you utilize it well. The best utilization, of course, would be to find one of the winners and kind of invest in that. But before doing that, invest in yourself. The data we get, the portal, financial portal, which we believe is the best in Pakistan's market, is Zakhira. That would be my recommendation, to get yourself a Zakhira subscription, to invest in yourself and kind of get going on this journey of being a research analyst. Thank you very much.
Thank you, Farrukh. The kind gesture about the surprise kind of gift for the winning team is extremely kind, and I'm sure adds a lot of excitement as well. With that, we now invite Farrukh Sabzwari. He is MD and CEO of PSX and has the honor of probably running one of the best investment teams early in his career through KSB Research, which was known for one of the best analysts in the industry. Farrukh has been a very senior investment professional. Currently, I think he's the chairman of IFMP as well. So with the mission and objective to increase financial inclusion and knowledge about the financial products. With that, I would invite Farrukh to please join us at this stage and kindly share his thoughts.
For people who are not aware, but I took over from Farrukh Khan, and I'm just taking the stage over from Farrukh Kareem Khan. Thank you, Farrukh. You know you have a future at the exchange. But Farrukh and I have worked at Credit Suisse in Singapore for a bit as well. Starting May, Pele, I will just thank firstly CFA Society. My team at PSX is complaining already that you deliver your speeches, which are usually very boring, and then you get off the stage without thanking the team, because without the team, you are really nobody. So thank you, CFA Society, right off the bat. We do a lot of joint work together with CFA Society at PSX, and I take pride in that because the speaker series that we have going with you, where we've some very interesting discussions on a round table. I realized before I joined PSX, roundtable discussions get you a lot more interaction going with the audience, and so you get more out of it. So the first thing I've done at PSX was, because we were missing on things called listings, I thought no big conferences, We don't want a conference in which people do not interact with each other. What we do want is put them on a round table, 20, 25 of them, and go city by city and just check on what their issues are when you look at PSX or why they're not listed on PSX. I'm not saying it's worked beautifully, but we do have a 12 in 12 pipeline of IPOs. What I mean by that is hopefully 12 IPOs that we're about to deliver in the next 12 months. And this could be the bare minimum, probably deliver 14. Size still missing in the equation. So some of these IPOs are smallish, but then I'm really a beggar at the moment. So anything that's coming my way is good. People have constantly asked me, why aren't you seeing as many listings? But I think over time, because the markets have done well, you are going to see a good year in terms of listings. And there are a couple of big listings in there as well. Biggest grouse for me still is PSX needs to become a household name. I think it's one of our biggest objectives at PSX. You all should be aware, at least the Gen Z crowd in the audience, सिर्फ 4.5 लाख investor हैं, 464,000 investors on PSX. And why I say sirf is because you're going to go and compete with Sri Lanka, Bangladesh. Bangladesh may be 1% of population. Sri Lanka may be 1% of population. So it's a difficult thing for me to admit, but I have told the board that this is the first objective that we need to fulfill. So I've given them a target of 2.5 million investors in the next 3 years. Thankfully, the new commissioner who's just joined, who I had a chance to meet last week, has said to the FM that they'll probably, hopefully do 1 million in the 1 year, which is going to go by. So the good news is, I think SECP, all the regulators, PSX, we're all kind of motivated to bring these two subject matters, hopefully, to full attention. Farooq drew a few examples on research. Now, whoever knows me since the start of my career, I see Imtiaz in the audience, Imtiaz Gadar, who runs Al Mizan Asset Management. He's smiling, and I'll tell you why he's smiling. I remember, I think, grilling analysts. That was the one job I did extremely well. Wajah kya thi? If you cannot add value to a conversation, it's as simple as that. Then you're really wasting time. So Farooq's screen showed, whoever knows me since the start, you have to keep connecting the dots, and you have to keep asking yourself, what value am I adding when I'm actually going to open my mouth now? Don't refrain from not opening your mouth. Please do that. Go ahead, do that. Take your chance. But do some thinking around it before you do, so that the audience or whoever you're talking to realizes you've analyzed a situation before you've opened your mouth or speaking about it. I keep referring to, and I'm glad I took this up, after my SECP stint, I did a few months from the National University of Singapore, which is NUS. It was an online 4-month course, which was digital transformation. And in that, I learned something about Elon Musk. I don't know if many of you are aware, but he uses the first principles approach to thinking. Now, what does that mean? It's something very similar to, I think, what we are trying to do at PSX. Why does it exist? Why does PSX exist? We're supposed to be the harbinger of capital formation. And that's true for all markets globally, no matter which market you pick up. But over time, we drifted. Why did we drift? Because the investment bankers who were supposed to bring quality projects to list on markets drifted. They drifted because of bonuses that came in the way. So it didn't matter if businesses were ripe for a listing or not, and whether they were kosher for a listing or not, as long as they got their fat paycheck and their bonuses. So things drifted from that perspective, and you didn't get quality players listing on the market. So PSX also did not, I think initially there was a huge plethora of listings in the early 90s, and then we've kind of lost our way. So we are now regaining that traction. And it's all because of one factor, which is stability. So you give the market stability, whether it's FX, whether it's interest rate, whether it's forex reserves, the exchange rate, and you see the market perform. Both investor count, last month was 14 odd thousand. That's the number we are adding on a monthly basis. But if you look at 12 months past, that number on average was 4,000 or 5,000 a month. So we really climbed a nice little hump there. And now the average is between 12 to 14 to 16 odd thousand. I hope we can retain that as we go along. One or two points that Farokh mentioned. I'll pick up something that I heard Imtiaz mention in his monthly speech or podcast to the investor community, which is time in market rather than timing the market, which is something that I think Farokh also picked up. So we did some research back home at PSX, and we told people $10,000 invested 20 years ago on PSX, we did not decipher by sector, would have been worth $185,000 today. So 20 years ago, $10,000, $185,000 today. Why is this important? सोचें ज़रूर इस बात पे. A year and a half or 2 or 3 years ago, inflation had nearly touched 40%. एक चीज़ आपको बार बार ये सोचनी है, if that environment would return, are you doing the best possible with your money or with your saving? And with the crockery there, he's clearly doing his best. But are you doing your best with the amount that you saved? Which means time in market rather than timing the market should be essential. जितने bonuses या dividends या corporate action आ रहा है, अगर इतनी patience है आप में, तो ज़रूर इस investment journey को appreciate करें. But please appreciate it for the fact that you have to remain invested come hell or high water, because markets come with the boom or bust cycle. Markets भी उसी तरह behave करते हैं, which is why stability is important. जिक्र हुआ automobile industry का, you just mentioned something. I'll give you an example of thought process which is a little value add, but then I didn't have the, I think, courage to put money to work on it. I came back from SECP, which was 4 years ago, and I think it was new. Sazgar engineering was very new. They'd launched a new model called the Haval. I went to their showroom. I ordered a vehicle. I really liked it. And I came to work at BMA. I was an advisor, a consultant to BMA. I called in the auto analyst. And I said, what do you think? The price was, I think, 80 rupees. And he said, sir, ये महंगा है. इसको आप 50 रुपए पे लीजिएगा. I did not bother to, again, do what is recommended. अपनी research नहीं की मैंने उसकी बात सुन ली और मैंने कहा अच्छा चलो ठीक कह रहा होगा, because he is the auto analyst. Clearly he was wrong. But I did buy the car. वो गाड़ी खड़ी है, उसकी value वही है जो 3 साल पहले थी, but the stock price has done well. And I have to admit, this has been a brilliant new addition to PSX, Sazgar Engineering as a stock as well, because they are thinking out of the box and they're continuing to challenge status quo. So, because a majority of you are the Gen Z sort of crowd in the room, एक तो I agree with Farokh Kareem. ये जो business है ना, investment banking, जिसका एक portion research है, this is probably the only business in the world, I challenge you, जो आपको पैसे देता है to read the paper and to be on top of the news. कोई और जो है ना business या field आपको पैसे नहीं देती इस काम के लिए. Investment banking आपको पैसे देता है कि जी please remain on top of the news flow and analyze it to your advantage or to other people's disadvantage. दूसरा, because we are sitting in a room, CFAs, integrity, ethics. आपने IFMP का जिक्र किया तो मैंने I've handed over the baton to our CEO of State Life. So I retired as chairman. बट मेरा अपना उसमें क्यों इन्वॉल्वमेंट था, बिकॉज आई रियली थॉट कंपल्सरी होनी चाहिए कुछ चीज़ें ऑन एथिक्स. सो वाइल बीइंग चेयरमैन आई एक्चुअली पुट, आई एम सॉरी हुएवर हैज़ टू गिव IFMP की सर्टिफिकेशंस, मैंने एथिक्स के चैप्टर हर किसी के लिए डाला है, उसको थोड़ा कनेक्ट किया है विद आवर रिलीजन एज वेल. सो दैट्स द बेस लाइन, बट I've added ethics as a compulsory thing that everybody needs to go through, because I think उसका refresher ज़रूरी होता है. Again, addressing the majority in the room, दो तीन बातें मैंने सोचा I'll use this platform to speak to you about where we are all headed. एक चीज़ पे तो मुझे अफसोस होता है, with given AI, I think your own cognitive ability to think will be challenged. क्योंकि इतनी चीज़ों के लिए हम AI में जाके उसका आंसर ढूंढ लेते हैं कि आपकी जो cognitive ability to think है वो चैलेंज हो रही है रोज़, क्योंकि आप उसको यूज़ नहीं कर रहे. चैलेंज नहीं हो रही, एक्चुअली हो ही नहीं रही ना, उसको आपने इस्तेमाल करना छोड़ रहे हैं. सो आई थिंक यू हैव इन टर्म्स ऑफ योर फ्यूचर एक बड़ा चैलेंज है ये, because AI is going to give you a lot more than what it gives you today. And so you have to keep at it, stay focused on the fact that ये cognitive ability to think जो है ना उसको dispel ना करें, उसको ना hurt होने दें. दूसरा, कोई shortcut नहीं है unfortunately to succeeding in life. अभी भी मेहनत मुशक्क़त, चाहे आप कोई भी business ले लें, चाहे investment banking हो या आप गाड़ियाँ बना रहे हो, हर चीज़ में you have to work hard. मैंने ये देख लिया आजकल, I don't know why this is becoming very common, but you see a lot of memes and a lot of material on social media on Gen Z and how quickly they get bored with whatever task is given to them. तो मैं रिपीट कर दूं कि किसी भी सक्सेस के लिए आपको मेहनत तो बहुत करनी पड़ेगी. दूसरा, there will always be certain amount of failure in everything you pick up. तो उससे आप डिसहार्टन ना हो. हर सक्सेसफुल आदमी के पीछे कोई ना कोई फेलियर्स हैं, विच इज़ वाई ही डज बेटर और ही ट्राइज टू डू अ बेटर जॉब नेक्स्ट टाइम ही इज़ एट द सेम. सो आपके लिए डिस्ट्रैक्शंस बहुत हैं, आपने फोकस रखना है. दूसरा, एक ज़रूरी बात मैंने ऑलरेडी मेंशन कर दी, बिकॉज फारूक मेंशन्ड इन्वेस्टमेंट्स एंड सेविंग्स एज अ जर्नी. Let's all admit we will all be living longer lives, because medical science इतनी तरक्की कर रहा है कि we will all be living longer lives. अब प्रॉब्लम ये है कि वो लाइफ फिज़िकली आप कितने एबल हैं टू लिव दैट लाइफ, क्या आप फिज़िकली फिट इनफ हैं टू लिव दैट लाइफ, बिकॉज अगेन इतनी इश्यूज़ हैं इन टर्म्स ऑफ द इंफॉर्मेशन फ्लो दैट सराउंडिंग यू. आपको एक डिस्ट्रेसेंट भी चाहिए ज़िंदगी में, चाहे वो भागना हो, चाहे वो जिम जाना हो, चाहे वो कुछ भी एक हॉबी हो, चाहे वो रीडिंग हो, दैट कुड बी अ गुड डिस्ट्रेसेंट. बट बिकॉज वी आर ऑल लिविंग लॉन्गर लाइव्स, आपको इस चीज़ पे फोकस करना है कि हो सकता है कभी एक ज़माना आए जिसमें अभी भी आपको नज़र आएगा कुछ फैमिलीज़ में 3-3 जनरेशन्स आर लिविंग अंडर द सेम रूफ. एंड बिकॉज ऑफ AI and the competition because of AI, in terms of some jobs, there may be a couple of generations in that 3-generation household जो शायद नौकरीशुदा ना हो. Hence, my insistence that you pick this thread up called savings and investment and work at it. कि आपने करना क्या है. Let this sort of money work for you, because you will need the money for you to work for you. I will leave it there. I think I've said whatever I wanted to. एक दो चीज़ें मैं PSX के बारे में कह दूं कि हमने एक तो I told you हम इन्वेस्टर्स पे काम कर रहे हैं, लिस्टिंग्स पे काम कर रहे हैं. एक प्रोडक्ट पे भी हमारा इन्फ्लुएंस, हमारा फोकस है. So we've launched something called cash settled futures for people who do trading in deliverable futures. They will know there was no cash settled product. तो अभी तक जब भी लॉन्च हुआ है वो फेल हुआ है अनफॉर्चुनेटली. हमने रीलॉन्च किया है, मेकिंग अ फ्यू ट्वीक्स, एंड दैट इज़ द प्रोडक्ट आई थिंक फॉर रिटेल. अनफॉर्चुनेटली बहुत कम रिटेल ने अभी तक उसको पिक किया है. विद एनी न्यू प्रोडक्ट आई थिंक देर इज़ some amount of time, gestation period, that a new product takes. And two, we are moving on to T+1 in a week or 10 days from now. So February 9th is the date of launch of T+1. So whatever you buy today will settle tomorrow. This will make it the 8th market in the world that's going to T+1. There are markets like China that are already on T+0. There are pockets of the US market which are T+1. Not all of it is T+1, but then Canada is, Mexico is, India is. So initially, बहुत hang-ups say of foreign investors on how this will work, but that was 8 months ago. So we brought it to a close, hopefully on February 9th. That is really about it. Thank you very much, CFA Society, again, for inviting me to speak to the audience. I wish everybody the best of luck. आप लोग जा रहे हैं अब, where do you go next? कहाँ जा रहे हैं? To the winners? Or are they sub-regional round? Okay. And competing with Sri Lanka, Bangladesh. Okay, good. So we had Bangladesh and Sri Lanka over at our International Capital Markets Conference. You know, there's so much to learn from each exchange. So each exchange comes with their own share of strengths and advantages and things where they are, some exchanges are poor, even similar to ours. Our startup board, which is the GEM board, is not working that well, but it was enlightening to hear from both Sri Lanka and Bangladesh that it's the same problem there as well. So we've got retail investors now. We've permissioned for retail investors to trade on the GEM board. That's really about it. Thank you very much again, CFA Society.
Thank you, Mr. Sabswari, for your valuable speech. May I request you to please stay on stage. I would also like to invite Mr. Farooq Karim Khan and our board members, Mr. Mohammad Asim, Mr. Asif Qureshi, Ms. Kanza Afzal, Ms. Sarwat Ehsan, and Mr. Junaid Said. May I also invite on stage Mr. Mansoor Zaidi. CFO UBL. All right, I know you all are waiting for the results, but before we announce the results, we would like to acknowledge the individuals, around 100 plus volunteers, who played a vital role in making this competition a success. To start off with, I would like to call our trainer, Mr. Waqas Ghani, who is also a CFA, for conducting an insightful session on financial modeling. And with that, I would also like to mention Mr. Mohammed Saad, who is not here, but he also conducted a session on how to write an equity research report. We now extend our appreciation to our mentors for their valuable guidance, continuous support, and dedication throughout the team's research journey. May I request the following mentors to come on the stage? Mr. Abdul Basit. Please give them a round of applause. Mr. Agam Kumar. Mr. Ajit Kumar. Mr. Ajmal Ahmed Siddiqui. Mr. Ehsan Badr. Mr. Hamdan Ahmed. Mr. Huzaifa Ali Khan. Mr. Mohammed Bilal Ijaz. Mr. Mohammed Bakaz Ghani. Mr. Nazim Ali Abdul Muttalib. And Mr. Jawad Abu Bakr. With that, we move on to our graders for their rigorous and impartial evaluation of the written research reports, ensuring the highest academic and professional standards. May I request the following individuals to come on stage, please? Mr. Amin Daud. Please give them a round of applause. Mr. Amar Lakhani. Mr. Faraz Bandukta. Mr. Qazi Ijaz Qureshi. Mr. Mehroz Khan. Mr. Saad Zikr. Ms. Muniba Abdullah. Mr. Waqasur Rahman. Mr. Naresh Kumar. Mr. Yasin Mohammed. And with that, we move on to our judges for their time, expertise, and commitment to evaluating the final presentation and upholding the integrity of this competition. May I please welcome on stage Mr. Shahbaz Ashraf, CFA, CIO of firm Ventures. Mr. Raza Inam, CFA, Head of Research, MCB Investment. Mr. Asim Wahab Khan, CFA, CIO, NBP Funds. Please give them a round of applause. Ms. Sana Abdullah, Head of Research, Alfala GHP. With that, we head up to our final results of the evening. The first results announcement is for the Best Presentation Award. And are there any guesses? All right. The Best Presentation Award goes to Team B from KSBL. Well done, Team KSBL. Up next, we have announcement for the runner-up team. And the runner-up of the CFA Institute Research Challenge 2025-2026 Pakistan Final is Cult of Compounding from FAST University. And as mentioned earlier by Mr. Farouk, there is a special cash prize for the runner-ups team as well. Please give them a round of applause. Congratulations, Cult of Compounding, FAST University. And now the winning team of the Research Challenge 2025-26. Any guesses? All right. The winning team for this competition is Team B from KSBL. Well done, Team B, KSBL. We now request our representatives to present mementos to the distinguished guests. The first memento is for our chief guest, Mr. Farooq Sabzwari. And the next memento is for the guest of honor, Mr. Farooq Kareem. If we have missed on any of our mentors and graders, I would request them to come on stage, please. I think Mr. Talha Amir Khan. And if there's any other grader and mentor. Mr. Amar Ilahi. Thank you, everyone. Thank you for being here and supporting us tonight. The dinner is open, and you all can have dinner now. Thank you.